Thank you very much, Scott, and welcome everybody to March 3rd. Here we are in March. Spring is upon us. Welcome everybody. Hey, what's up, Mike? What's up, Chris? Good to see the regulars in here, and also good to see a mix of new people. So let us begin. And before we do that, just got to make the lawyers sleep a little bit easier. Just want to make everybody aware of the fact that the information that we share in this webinar or any of the other webinars that we're presenting during the week is for educational purposes only. If you do need investment advice, please seek a registered investment advisor or a licensed Series 7 stockbroker. In other words, somebody that is legally allowed to dispense that type of information. Okay, I think that pretty much covers it there. Always like to take a little bit of time at the top of the hour here, especially since we got a good bit of new people in here, to let everybody know about the community that we've built around the award-winning technology that is Trade Ideas Pro. And over here in the left-hand corner, you can see right here, Barry's Trading Room, okay? Hosted or moderated, I should say, by Mr. Barry Anderson, a longtime user of Trade Ideas technology. Used to moderate the forums back in the old days when we had the forums, but now has his own trading room, has recently been revamped. So bottom line is this, Barry does an excellent job with 300, 400, 500 people in there, showcasing the way that he uses the technology as well as answering questions about TI and all the different ways that he uses it. If you've shopped around the web for trading rooms, you've probably noticed that they're not free. They cost a pretty penny, but not here. There is no cost to join the trading room at Trade Ideas and hear everything that Barry has to say. So once again, bringing you value with no additional cost there. And of course, the 5 p.m. Eastern webinars today, you get myself and typically Steve, but Steve is out. Hopefully we're gonna have him back tomorrow. He's been out for a good bit of time here while he recovers from getting one of his knees replaced. So he'll be back bigger, better, and stronger like the Bionic Man starting tomorrow with the trade of the week, as you can see right down here. And Andy is gonna ride shotgun with him. Wednesdays roll around and we like to change it up a little bit. We bring in our CEO and founder, Mr. Dan Merkin, along with Brad Williams, our Chief Technical Officer, typically giving you a peek at technology and new features that might be coming down the developmental pipeline. So hopefully maybe Wednesday, maybe they'll give you a peek at a $0 broker dealer that should be coming down the pipeline. We got to keep our fingers crossed on that one. Andy's going to round out the 5 p.m. Easterns with the trading studio, and I typically ride shotgun with him. And then our daily support webinar, which starts every day at 12 p.m. Eastern, Monday through Friday. It used to just be the Friday session where we changed things up a little bit, but we've done some revamping of the TI universities and kind of archive those into the YouTube channel. So now, each and every day between 12 and 1 p.m. Eastern, you can come get live support, ask your questions in real time, and we're doing that over on YouTube. We'll provide you with a link in case you want to join when this webinar is concluded, and we'll show you that link on the way out. Oops, got to get used to my drawing tool here. Hold on one second. There we go. Okay, all right, didn't know this slide was here, but this is exactly what I was talking about right here, the link at the bottom, which trade-ideas.com/live. You can just bookmark that because it's the same each and every day. All you gotta do is go there and enjoy the session. I also like to give everybody a little peek at how our user base has responded since we first introduced the very first AI module. Seems like a very long time ago. I guess it was about 4 years ago. Seems longer than that. AI introduced in the very beginning of 2016. And as you can see, our user base has expanded every year. After that, we'll probably be adding the 2019 bar here in the not too distant future, as well as Brokerage Plus. Short history on Brokerage Plus. It is our add-on module, which allows you to trade through interactive brokers. We've developed what we believe to be more intuitive trading front end, easier to use, more functionality. Not that there's anything wrong with our friends over at Interactive Brokers and Trader Workstation, but we allow you to do all kinds of cool things like one-click trading, trading from our charts, as well as automating AI strategies, as well as strategies that you create for yourself. Of course, when we first picked Interactive Brokers to be that broker dealer that connected to Brokerage Plus, it was because they had the most economical commissions and a pretty good short list, all the things that traders look for. But as we all know, things have changed dramatically in the broker-dealer landscape over the past 3-4 months with the advent of zero commissions. Now we're starting to see a lot of consolidations, a lot of buyouts as everybody clamors to grab their piece of the market. So, as I said earlier, hopefully before too long, we're going to be making a connection to a $0 broker-dealer so that Brokerage Plus can have access to that type of commission fee as well, or non-commission fee, I should say. All right, getting on to the topics of today. And by the way, I'm keeping my eyes peeled on the questions panel, but since I am alone today, I'll have to, okay, all right. Don't see anything that I need to address right now. So on with the show. Okay, as this is typical, this is where Steve usually comes in and does the market recap, but you don't have to be that big of a technical expert to see what's been going on as of late. I think everybody's pretty much painfully aware what has happened over the breakdown that we had here, all the way down to this level of support, or which acted as support. In hindsight, you never know if it's going to until it's happened. Bottoming out down here, backing up to these levels back here around August of 2019 or so, really going through 2000 to the monthly. Okay, doesn't look near as bad on the monthly here if I kind of squish things up. You know, here we are taking a little pullback, just bottoming out right down here to this level that acted as support, and now bouncing back up. And of course, this was February here, nice big red monthly candle, and now we're starting to green up, although we're only one trading day into March. As much kind of bounce from inertia? Well, Tuesday, Wednesday, Thursday, and Friday this week are going to be very telling. We're going to know a lot more by the close Friday. Today is just Monday. So will the momentum continue? Can we get back up here? You know, it looks like we closed above these levels right here. But are we going to hold? Just drag a line up there real quick here. You know, we closed above these levels right here, but will we hold? That is the big picture. So what are we going to see for the next couple of days? A little sideways consolidation, more ebb and flow to the up and down side. We will see come tomorrow, but it should be interesting nonetheless. So not going to spend too much time on looking at the daily, weekly, and monthly. Everybody is painfully aware of what's transpired over the past 2 days, couple of days of bounce, and we'll see what happens tomorrow. Now, you know, when we're in market conditions of this nature, a lot of things kind of fly out the window that we typically can rely on. First and foremost, my favorite compare count windows that I typically like to look to get an idea of how the rest of the day might unfold. This is what I saw after the first 15 minutes today. And Terrell, I see your comment there about having no sound. Obviously, you can't hear me. Everybody, if you just don't mind 1 second, I'm going to tell him to log out and log back on and see if that fixes his issue. All right, thank you, Chris. Thank you, Mike. I told him to log out and log back on. That might fix his issue. We'll just hope it does. So these are the readings I got after 15 minutes, which, you know, after I saw these, I'm like, you know, I'm not going to just jump in long. However, here we are looking at the SPY on the 15-minute candles here. Now, it was right initially because we closed this candle right here at 298.11, which is, we'll just call it right about here, close enough. All right, this line right here. Now, for the next 30 minutes, we did take a nice cycle down to 280 or 298.17, and we bottomed out right about 294 and change, 26. So not a small move, nothing to sneeze at on the SPY, but caught a bid, put in a wick here, followed by a third wick, and it wasn't too long before we were busting out of this little opening range here on the 15-minute SPY chart. And then we can see the rest is history today. Took a nice leg up over the next hour and a half, took a little flat line dance. And then it's interesting to see, we did pull back, but just to that level where we broke out of earlier in the day, right at the hour and 15-minute mark here. So once again, no matter what time frame we're looking at, this little area that could have been resistance got busted through. Later on, we came back down. It acted as support. We bounced right off of it and then set higher highs going into the close with some decent volume today. Now, if this would have occurred on lighter volume, I'd be a little bit more skeptical. But we can see here the relative volume levels on all the major tracking ETFs well above 2 and pushing 3 on the SPY and the Qs, which are the two, in my opinion, most important. Kind of doing a very good distance away from its all-time highs, but turning in the lightest volume of the 4 tracking ETFs as well. But a very confident close and a higher high at the close, which is good for future bullish action. And, who knows? Will we gap up, down, flat tomorrow? We shall see. So everything said and done, a little bit of right on the compare counts and, a nice turn at the bottom here, which is good for the bulls. Okay, getting on with the program here. Holly has been, hit and miss in this type of environment. Last week we had a couple of good days, a couple of bad days, but in a market that was currently in free fall, even a statistically weighted system is going to have a hard time. Having said that, not a bad day today. Of course, if we check out the toolbar over here and look at all the different modules, between the 3 modules, we only had 14 signals, 5 from Neo, 4 from 2.0, and 5 from Holly AI. 2.0 down slightly. Holly 1.0, we'll just call that flat, up $3, assuming 100 shares per trade. That'd be about 0.4 of a point for 2.0. And then Neo turning out almost 4.5 points of profit. However, not as easy as one would see or could assume from just looking at this total because of the aggressive profit nature here. The same way with Holly AI. Aggressive meaning in Holly, just putting the trade on and not worrying about anything, which is kind of hard to do from a human's perspective, but just to, rehash here, especially since there are new people in the audience, there are 3 different risk modes that the AI can operate in. There is conservative, which we can see the conservative column right here. And if we take a peek and make sure my blotter's expanded out so we can see all trades, if we're looking at conservative mode, which means adhering to our risk parameters, which everybody should do, therein lies the, one of the downfalls of stops, okay, especially in a market of this nature. What do we have here? 1, 2, 3, 4, 5 stop hits out of 14 trades, which is a pretty high ratio for stop outs for the AI. When the market is quote unquote in normal mode and we're not having these huge swings and just grinding up or grinding down, we usually don't see near that percentage of stop outs, but due to the nature of the market, this is what we saw today, a higher number of stop outs. Now in moderate mode, we look a little bit better, right? That's Holly adhering to stops, but not adhering to profit save and reduce risk, just staying in the trade, adhering to the stop, whereas conservative profit adhere to the stops and be subject to the early exits that the AI can call, which are reduce risk and profit save, assuming the position stops going in the direction that it's intended to. And then of course over here, we have aggressive, right? And I'll just expand that column out a little bit. So aggressive profit right here, just putting the trade on and hoping for the best. It really only makes sense if you're taking every trade that the AI puts out and letting everything do their, letting every position do their thing. It's not called aggressive risk for nothing. You're taking on a lot more risk and playing the numbers more for a pure statistical play, but there is a lot more risk involved. So having said that, taking a lot of risk today paid off. Maybe some people are geared up for that. Personally, I like to stick to the moderate risk, not the conservative, not the aggressive, but just right in the middle, kind of like Goldilocks and the Three Bears. I like my porridge just right, okay? But of course, everybody's gonna be a little bit different. Until you experience the AI and get a lot of trading sessions under your belt, you really won't know what you prefer. So just keep that in mind as you move forward. Now, what we're going to do now is talk about some of the underlying aspects of Holly and things that we can key off of that aren't necessarily listed in some of these columns here. And what we always like to talk about is plucking out some of the spread that can be generated between conservative mode and moderate spread, or excuse me, conservative mode and moderate mode. All right, so going to sort by moderate mode, which I already did. And this is for when we see a much smaller total in conservative mode, which we do in these first three trades, as I've sorted by moderate profit here. We got 1475 over here versus 238.95 for the KPTI trade. We got a small loss here in KALV of 963 versus had we stayed in the trade, and still adhering to our stop losses, keep in mind. All right, because if we look at the exit reasons over here, these are the two audibles that the AI can call to close a trade out early, even if the stop was not triggered, which is the case for all three of these. Some of you may have heard this ad nauseum by myself and Steve and Andy and Sean, but the AI's strong suit is its statistical viability that it brings to us each and every day based on the strategies and the win percentages that we can see down here that come into play at the beginning of every session. Now, having said that, of course, the strategy can overperform or it can underperform, but based on the back test and the optimization the night before, these are the odds of, a trade working from each respective strategy. Now, this KPTI is textbook because it's set up so nicely. We can see right here, I clicked on KPTI and the signal came out relatively early, about 5 minutes and 44 seconds into the open to be exact, at a price of 23.70, as you can see right here in that first 15-minute bar. Now, after the AI made the call, took a little upswing, took a little downswing, and we just basically ebbed and flowed through that entry line for a good 1, 2, 3, 4, 5, about an hour and a half. And here's the 10 o'clock Central Standard Time 15-minute bar, okay? Now, I love it when these types of plays present themselves because sometimes the AI trades will go immediately. That can be a good thing or a bad thing. If we were quick enough, if we're using automation, or if we were just quick on handy with the steel on a manual basis and we got it, great. A lot of the times we'll pull these things up and they've already moved 20, 30, 40 cents past the entry price and we're like, yeah, I don't want to chase it. That's just not what we like to do as traders, right? It's already moved too fast. I wasn't fast enough. I wasn't running automation, whatever, okay? But there was plenty of time to get the same price or maybe even a better price than the AI, depending on when you saw this. But we had a good hour and a half of consolidation from the time that the AI called the signal, okay? 15-minute bars here. So 1, 2, 3, 4, 5, 6, about an hour and a half, roughly speaking. Now, when you pull this thing up and you see the relative volume levels that were being shown today, and of course, a lot of things had high volume, but man, this thing finished at 20 times relative volume. So it's going sideways. It comes down here, it gets a little weak, but nowhere near the stop loss. Belly's back up and slowly but surely creeps back up here. We get a nice level consolidation area. So there's a lot of good aspects about this trade. Number one, we got statistical viability behind us because the AI brought it to us. We're getting a little consolidation area here while the buyers and sellers figure out who's king. And then we come back up here, we break this line that was the prior high, and then whammy, off to the races. Now, it's always nice when some of our favorite high volume tickers also come out with this symbol. In the case today, it was one that Andy came up with a very long time ago. And you can find this window in channel 4 if you'd like to play around with it. Extreme High Low Pro, okay, which once again is showcasing stocks hitting highs and lows with extremely high volume. So we got the AI signal right here. We got a nice consolidation area. I'd already be marking up this high and waiting for this break, because this is what I like to refer to as a secondary pattern on top of the AI signal that we can use to enhance our position. If we're already in 100, 200 shares with Holly, or 2,000, whatever your initial entry is, whether it's dollars or shares, and then we get a nice consolidation, and then we wait and we wait, and bam, it hits that place. But as you can see from the timestamp right there, that is the 10 to 10:15 Central Standard Time bar right there. So this little guy, also called the breakout, even more affirmation that this thing is cooking. We got the high volume cooking, and then it was just off to the races there. Topped out right here, took a little breather. Obviously getting out up here, maybe you got out of a little bit, but as soon as we start to see this little pullback right here, still plenty of time to get out of that thing for a very nice move. Even if you held it into the close, you still made a very handsome profit, as we can see right here. Holding into the close yielded about 17% on the KPTI. All right, so just keep that in mind as you move forward. Anytime you see the AI closing a trade in profit save mode, which was right here, and that's what gave us the 1475. A lot of the time, those reduce risk and profit save signals can be good entry signals as well. This one not near as pretty, but the idea is the same. Holly taking a $9.63 loser in this one here. As we can see, stayed in the trade a good while. Entry time was 10:21. Held it almost about an hour before the close, because that's what the strategy had a longer hold time, but she still reduced the risk on it. So as fate would have it, right here is where the AI got out of the trade right here. Reminds me of me sometimes. You wait and you wait and you wait and you get bored with the trade, and then you finally call it quits, only to have it rip up in the final 45 minutes. So once again, not coming anywhere near the stop loss area. All we had to do was be patient on this one, and once again override the AI's exit signal, because that's a big difference between losing 10 bucks and making 112 bucks. And by the way, if anybody's wondering what these figures right here are based on, it's my sizing of positions on the AI. If I go to tools and options and click on AI trade size, I'm using a risk-based parameter here, risking $100 per trade. Then it automatically scales me into as many shares as that $100 risk will provide. Okay, so that's what all these numbers are based around. We did have one more to take a look at here, which was one to the short side. Not as big a mover as the KPTI, but as far as the beauty factor of the charts, that's a really nice setup, a really nice consolidation period here. We get the signal from Holly about 2 hours into the market, a nice little short right here as it's breaking these candle bodies. Of course, it did put in a wide range bar on the open here, and we got this wick down to here. But depending on what you like to mark your charts by, candle bodies, wicks, doesn't really matter. It's a personal preference. A lot of the times, this acts as a forecaster, okay? Not all the time, but it did on this one. Sellers took it down here. They couldn't keep it down, snapped back up. But as fate would have it, it gravitated all the way back down to the bottom of that wick exactly at the open. So we get the short signal right here. And then very similar to what we saw in the KPTI, we had a long consolidation period. Now the AI threw up its hands about right here, okay? Not even a 30-minute hold. And if we look at the entry and exit time here, what do we got there? 4 minutes, about 16 minutes, the AI stayed in the trade. Pulled the plug early on a profit save. Took its whopping $6.98, but all we had to do is be patient. I mean, this thing was going nowhere. Once again, hugging that entry line like a glove. Now, also, what I failed to point out on the other two trades, and we'll just kind of backtrack and show you, this green line here, which is my 10 period SMA, which is a great guiding hand. Thanks to Steve Gomez for turning us all on to this one. But it kind of melds with the price line here, so you can't really see it, but the entire time, keeping it nice and tapped down. So once again, we had plenty of time to get into this trade. And once it cracked this level here, it was a great time to add to the position. As it broke these candle body levels right here, it made its last hour descent all the way back down to that telegraphing wick that was thrown at us right on the opening 15-minute candle there. Once again, when you see volume levels like what this guy closed at, 11.86, which you may have noticed, anything coming out of Holly Neo or Holly 1.0 has the added benefit of pretty high relative volume most all the time now. Michael Noss has done a really good job at revamping Holly Neo and Holly AI, and hopefully before too long, Holly 2.0 is going to be revamped and deal in swing calls mainly for multiple day holds. Right now, of course, the AI is all geared towards intraday. But as far as the beauty of this chart, plenty of time to make that entry, and then a great secondary pattern unfolding later in the day to add to the position there. Now, before we're done with conservative and moderate profit spread here, and how we can capture some of that just by watching Holly's exit signals and deciding to basically go against them, wanted to show the KPTI trade, show that 10 period SMA as well. Well above it the entire time and sticking to it like a glove going into the close. And not quite as pretty on the KALV, but a few wicks coming through it. But for the most part, couldn't keep it below that 10 period moving average. It could wick down, but eventually would reclaim it, and a nice trade into the close for everybody. Good deal, Scott. I love to hear that because this happens all the time, okay? Things like KPTI and things like CVGW, they're out there each and every day, you know, week by week, month by month, we're seeing the same patterns evolve. So, you know, people get it in their head, well, Holly's only good for auto trading. Well, just like any tool in your trader's toolbox, whether it's a study or some other kind of oscillator or running Holly in auto mode, there's a time for that and there's a time not for that. But taking auto execution out of Holly completely out of the equation, you can pick up a lot of good plays by getting used to this process and examining each and every Holly play as it comes out. You know, just look at it as a highly curated basket of stocks from a manual perspective, and every day you're going to have a few gems in there, okay? You call it a lot of things, a statistically weighted watch list, okay? And then, of course, there are days where auto trading benefits us, but it's just like knowing which tool to pull out of your carpenter's bag. If you pull out the screwdriver when you need the hammer, it's probably not going to work too well. And if you pull out the hammer when you need the screwdriver, you're probably going to break some things. But I think you guys get the point here. The bottom line is, imagine the AI as a very experienced trader that trades with statistical probability without fail each and every day. And depending on what you look for, whether it's what I'm showing you right now in these consolidation and auxiliary patterns that play out with high volume, or something that you've stumbled onto yourself just by sitting here and watching this model trade each and every day, there's a lot of value to be pulled out of this model, not just auto trading. All right, little time check here, a little drink of water, and we'll get cooking here on the next topic here. Okay, and one thing I would like to point out real quick here, if you do have a premium subscription and you've paid the fee to access the AI auto trading functionality, and let's say you might be dabbling in it thus far, maybe you haven't, but it's always a good idea, and I do this every day now, to run the AI in simulation mode. Because if I click over here on the Holly AI mode and I right click and I say edit my long trading instructions, and you look at the trade mode, we've got conservative and we've got moderate, okay? Or you can do the best of, which will, whatever mode is in control at that point in time, will be used for your trade. I plan on doing a lot more testing of that in the future. But right now, I'm just running it every day in moderate mode, all right, which is adhering to its stop losses. You may be asking yourself, well, why don't they offer aggressive mode? Well, we didn't add aggressive mode. This basically is a safety mechanism, okay? If you want to operate in aggressive mode, then what you would do is as the trades came out, you would just simply go and cancel the stop loss order, okay? That's the way you can auto trade in aggressive mode. You have to exert a little effort and you have to go in there and consciously cancel those stops out. But as a tether to reality, okay? By watching the AI either in conservative or moderate conservative or moderate mode, you're going to get a good idea of how things would have played out in the real world. Now, you can see my blotter today down 350 bucks, okay? But if you held everything with no stops, you're up 448 bucks just on Neo alone, okay? But if you're adhering to your stops, this is the real world, okay? So it's very good to get an idea of the real world if you're using stops versus aggressive mode, which pulled it out at the last moment, but that's only if you're running with no stops and just seeing how the entire basket plays out. Now, the other good thing about running things in conservative or moderate mode is the fact that this is building in slippage, okay, which is kind of a must when you're tempering your expectations about whether or not to automate your positions. So WSC right here, you can see 17, right here, 17, hold on, CVGW, entry price of 17, oh, wrong one, 59.91. Okay. So this was a short in CVGW, a price of 59.91. Now, if you look down here, by the time I acted on it in simulation mode, I got a worse price of 59.76. So in essence, 15 cents worth of slippage, okay? That was the amount that the stock moved during that period of time. So this is a very good feature that we've built into the demo trading or simulated trading of Holly DAI. It's building in slippage for you so that you can see or gather more of a realistic expectation based on your risk mode and your slippage as to how closely this is going to play out in reality. So a big difference between conservative mode today and taking about a 3.5 point hit or $350 hit versus aggressive mode being roughly up about 400 once you back out 2.0's loss and just call that a flat up there. So if you do have your license to run Holly in simulation mode, I would definitely recommend it before you went in there and started launching things automatically. All right, just checking out a question here. Where can I find out how to link my TOS to TI, connect my brokerage account? Okay. Yeah, Scott, depending on what brokerage, if you're using Thinkorswim, that one is a little bit finicky. Another attendee was talking about the same thing. So your best bet is once the market opens tomorrow, hit our live chat area and we'll get you sorted out on the linking there. That's the best bet for getting your linking issues sorted out there. All right, now we're going to go back to some basics here because, man, the turbo brakes up along with Andy's High-Low Pro on the high volume side, they were just spitting out range breaks left and right. It's the nature of the market today. We could say, you know, anytime we're looking at range breaks, very similar to the KPTI, we have to consult the daily and see how much room might be present in that thing. Of course, due to the nature and the downturn of the market, figuratively speaking, you could say everything had room in it today. And I'm just going to point out some of the, excuse me there, ladies and gentlemen, had to cough, didn't want to do it in your ear there. Some of the things that turbo breaks up, my original version, which is right here, was spitting out today. and I'm going to show you about 4 or 5, but man, these things were just all over the place today, and giving us decent time to react and giving us nice solid patterns to key off of. Once again, KPTI, nice consolidation area there. CVGW, nice consolidation area there. So now let's take a look at some of the other ones that were getting kicked out by turbo breaks up today. And once again, turbo breaks up and down. These versions are also available in channel 4 if you'd like to go out there and save them to your cloud so that you can start watching them. That's where you would find them. So first on the list, this IOVA. And where did my single stock window go there? It keeps wanting to hide. Just wanted to bring this up for relative volume purposes. But this is a nice one that was spit out right here from turbo breaks up. Nice consolidation area right here, and boom, as soon as we tick through that level right there, you can see we got a tick right here, arrow coinciding perfectly with that range break. So here's the deal with these setups. If you're able to find this nice little consolidation here, and we were doing it for about 1, 2, 3, 4, 5, 6, an hour and a half seems to be the magic spot today before we finally broke this nice even plane up here. This is the entry bar right here. Let me turn on my mark right here. So this little guy right here, that's the entry bar. And when we're assessing risk on these types of entries, we don't include the entry bar. We look back one 15-minute candle, which is this guy right here. So the prior 15-minute candle, if we can stomach the low, then that's a good entry. And you can see here, never really even approached that stop area right there. Took another little 30-minute consolidation period after the entry as it hugged the entry line, looking very similar to some of these Holly plays before liftoff occurred. And we can see here our risk area right here, reward area right here. We could probably pack that guy in there, I don't know, 4 times or so. And that is the type of risk to reward that we're looking for here. You know, you at least want to have 2x R, or, you know, risking 1 R to make 2 Rs. The more, the merrier, we could say. But a really nice one and low risk on IOVA there. Next on the list, we had Cersal, is what I like to call this one. Seen this stock a million times coming through my tickers. And once again, 1 to about an hour, hour and 15 of consolidation. If we mark the high and the low, include the wick there if we're playing strictly by the rules. But of course, if you're a candle body person, that is your personal preference. Before we finally get a little tick right here above, and then the same song and dance. If we were going to take this trade, this would be the risk area right here. Once again, acting nothing like it was going to stop us out. We get the break further up here, hug the line for a little bit longer, not quite as long as the other ones, and then boy, this thing just stair-stepped up nicely. I need to update my reward area there because I was looking at these before the close, and it really tacked on a lot of steam, a lot of profit before the close there. When we're talking about risk reward on this one, man, I think we could stack that risk area 5 or 6 times in that reward area there. So SRCL, good old Cersal, Stericycle, ended up being a very profitable intraday trade. What do we notice here? We got banging relative volume, which, I mean, throw a dart at a stock today, it was probably doing well over 1 on the relative side. But then we have the 10 period coming into play, and it just surfed that thing beautifully, getting well above it into the close. And when we did take a pullback, it was just right down there to that 10 period moving average. So really doing its job on the SRCL. Next on the list, Bill. When I first saw this stock this morning, I pulled up the wrong symbol, manually typed in BLL. It's like, that doesn't look right. See BLL coming through all the time. But this one is like, I'm going to pay a bill. Now, this one not near as pretty, but I just wanted to include Bill here because the pattern is the pattern and it still worked. We had the initial high being put in down here. We had the initial low being marked off down here. Now, this one expended a lot of energy because this here is the line where the high of that opening 15-minute wick was busted. So we expended 1, 2, 3, 4, 5, 6. We were on an hour and 3/4 of up move before we busted that line. But once again, the pattern is the pattern. The plane is being broken, and how do we assess our risk? Once again, not the entry candle here, but the prior 15-minute candle. That was such a nice tidy candle. This was our risk area right here. And then boom, you can see, even though this thing had been going up for an hour and a half, it just did not care. Risk was tolerable right here. And then it just marched on into the close. Of course, everything getting a little help from the market today, but that that mindset, these two big bars in the S&P, that is the trend, and the trend is your friend. So even though this one had expended a lot of energy, it still worked beautifully. Once again, that 10 period coming into play. Yeah, maybe we could have fit the risk area in there at least twice, maybe 2.5 times. Still a decent trade by anybody's standards. Got another B stock coming into play today, BIP. Nice little consolidation. I love it when they do this. Even though it didn't just take off, kind of gave us a little dip, a little scare, but still not coming down to our risk area here. Nice consolidation. We get the signal right here as it pops its head above. Can quickly identify the risk area right at the bottom of that wick there. And it gave us a little bit of a pullback, but nothing to worry about. A lot of the times, the ones that do this and hug that entry line, sneaks back up here, finally kicks it. You could have just stuck with what you had or went, you know what? The second time might be a charm here, which in this case it was, and could have tacked on another, doubled up the position here because it tried. Sellers tried to take control. We wicked back up, held this level, 10 period, keeping it elevated. And then when it breaks here, we get the meat of the move. Once again, could put that risk area in there at least probably 2.5 times. And that is always what we're looking for. Bigger reward area than risk by at least 2. And this little guy, nothing to write home about, but once again, something that did work, adhering to the same pattern. About an hour consolidation on this one before it pokes its head up. Risk kind of even with the entry bar, that prior 15-minute candle kind of butting up against the actual entry bar, but it's way up here. Never even comes close. When it hit, marched higher. Set up one more time here in case we did want to tack on. If you're a new trader, you've probably heard, stick to your stop losses on your winning trades where the opportunity presents itself, add to them, okay? But that can be really confusing a lot of the times, especially when you're new. But when you're talking about range breaks and these types of consolidation plays, it is one of the more simple patterns to identify, all right? I'm a big believer in simplicity. Our good buddy from the olden days, Leonardo da Vinci, said simplicity is the ultimate sophistication. That certainly does translate well into trading, along with just about every other aspect of life. But these are some of the simpler patterns that you can hope to find on a day-by-day basis. Also like to refer to these types of patterns as the most plentiful forest animals, like rabbits, all right? Rabbits are there all the time. There's more rabbits than any other animal out there. You just got to be patient and wait for them to show up. And with this nice, format of a consolidation range break, it's kind of hard to misinterpret these patterns. And then sometimes they repeat themselves. So over here, right at the 11:30 Central Standard Time, would have been a great time to add to the position from our original entry right here in the 9:30 bar. Get a little bit more of a lift before we peel back towards the close. Notice what happens on this one. One of the only ones that did this. As soon as we get a close on the 15-minute candle right here below the 10 period, a lot of the times that means the steam is out of the stock and we're going to take a little pullback. But this is one of the only ones that kind of conked out on us about an hour, hour and a half before the close. Yeah, Philip, sorry. I'm getting used to using my drawing tool, still not really proficient at it, and hopefully we can increase the size of the pointer as well, but duly noted there. All right. I do believe that takes us to the end of the presentation here. Got a little bit of time here left. So if there are any questions about anything that we've talked about, now would be the time to get them out there, and I'll do my best to answer them. Otherwise, if there are no questions, we'll let Scott show everybody a new discount code and how they can save some money on a new subscription or an upgrade. Well, glad you like the content there, Philip. And I'll do my best to start using my drawing tool a little bit more. Just got to get into that habit. Only started using it a couple of presentations ago. Thank you very much, Mike. Okay, looks like no new questions are streaming in there. So Scott, if you're ready to walk us out, we're ready for it.
Unmuted.
All right, sounds good. Yeah, we have a new ebook we just released. You should check it out. It'll give you some good ideas on what to do during earnings seasons and outline some strategies that you can employ. It's written by our Chief Information Officer, Dave Mabe. Just go to trade-ideas.com/earnings, plug in your email to get the download. We got a podcast that we release intermittently. There's a couple of good episodes on there that were released in the last few weeks, so do check it out. Just search for Trade Ideas Podcast wherever you listen to your pods and add us as a subscription. There's a new code this month, March On, all caps. Use that to save 15% off the first month or year of Trade Ideas or Brokerage Plus. You can also use that code if you're upgrading from standard to premium, so just keep that in mind. Jamie is on Twitter. It's @QuantBot. We also have @TodayTrader, that's Steve Gomez, and @TradeIdeas. Facebook.com/TradeIdeasPro is the Facebook page to follow. Any questions at all, shoot them over to info@TradeIdeas.com. That goes into our help desk software, so the question does not get lost, and it gets answered by the appropriate team member to give you the right answer you're looking for. Thank you, Jamie. Thank you all for attending, and the recording will be up later on tonight or tomorrow. Thanks all.